All right. I hope you guys and girls are having a wonderful start to your new year. So we're gonna go over Tracy Schuchart's energy and minerals for the first week of the year of 2023. So this is a little about Tracy Schuchart. I don't know if you guys want to do research on who she is, but she is highly revered in the energy commodities sector, particularly energy, right? And she's got her background. I will let you go over and do your own research, but just know that she's been vetted and she's quite good at what she does. And so that is why I love her Energy and Materials Weekly. Not really into the materials part, but the energy part is really applicable to myself. And so if you don't know me, my name is James. I did a ton of real estate. I own a few small businesses in the insurance and real estate industries, and I sold a lot of my houses last year in 2021 and early 2022, because I feel like I saw the writing on the wall in the real estate industry, and then I put a lot of those into the energy industry because I saw the writing on the wall there that it's going to fly up. And so this is just kind of some updates on what's going on in the energy industry, and I'll be upfront. It's meant to convince you to invest in it. Hopefully with me. If not, hey, that is up to you type thing. And if it doesn't convince you to invest in the energy industry, hey, that's okay too, because we all do it. It won't be as profitable for the ones that do. So enough with that. Let's jump into it. So she talks about Colombian oil. I'm going to skip over it. I'm going to let you read it for yourself type thing. If you're one of my partners, prospective partners, you're going to get this sheet in an email. If you want to be that, or you want on the email list, just shoot me an email and you can go over it type thing. It's not that it's unimportant. It's not the big things I want to talk about today, right? Again, it's not unimportant, but it's more of like it's a small fish in a pond of giant fishes. And then she's also talking about what to trade on stocks. And again, none of this is trading or financial advice. I'm just a guy who is really kind of retired but chooses to work because he can. So and he's young. So anyhow, charts of interest. This is actually very important. I love this. So she puts in the best and worst performing stocks in the last year. 10 were energy. Look at that. Occidental, Constellation, Hess, Marathon, Exxon, Schlumberger, ADA or APA, Apache Corp, Halliburton, First Solar. I have no idea what that is, and then Valero. Let's see. Occidental, Hess, Marathon, Apache. I don't think we have Halliburton, and I think we've got one of the big ones, either Exxon or Valero, drilling on some of the mineral rights that we own. So yeah, these companies are up the worst one's up 70%. Let's put it that way. The best one's up 120% year end. The worst performing ones, right? VF Corp, no idea. You got Warner Brothers going broke. Woke is making them broke. Meta, Signature Bank, Tesla is actually doing pretty good. It's even doing worse this year. Match Group, no idea what that is, but you got some financial groups and everything there. So energy is performing amazingly, and as she goes into, it still has room for upside. We're going to get to that. SPR, this is Strategic Petroleum Reserve, basically out of the oil crunch in the 70s. The U.S. said, hey, we're going to put a bunch of oil underground to ensure that if there's a war, hey, we've got energy. We can fly our planes and defend ourselves, right? Well, the current president has decided to take some out as try to put political gain to lower gas prices to get reelected, get his side elected in the midterms, right? That has now stopped. And so she looks at this and she looks at 1983, which was the other time it was at this level, at this low of a level. And it's going to be bad. Let's put it this way. As she says, the piggy bank, the savings account, is at all-time lows. And so if there's a financial hit to the system, i.e. if gas goes through the roof, there's not much they can do in order to cool it back down, right? Also, what else does this do? The Biden administration has said that when oil is around $70 a barrel, they're going to start to refill it, okay? Two things. One, that is not cheap oil. Like $70 a barrel, that it feels low to me because in the last year and a half, it's been above it, right? It's In 2021, it hovered between, like, when it recovered, it hovered between 60 and 80. But last year, it hovered between 70 and 100. It was up to 125 there for a little bit. But $70 oil is not low oil, right? It is medium high oil, okay? Oil and gas companies break even at about $48 a barrel, give or take, right? Again, so they can profit anything in the 50s and above. It's at 70. They're making great profits. And not only that, but they're expanding slowly and wisely. So my point is this, not only does the drain on the SPR put oil in a great position for upward momentum, right? Because something happens, there's no way that they can cool it down or stop it, right? They can't release a ton, but it also puts a floor to it, right? About $70 a barrel. The Biden administration said that. So what you have here is you have an environment to where your downward risk is about $70 a barrel, which is high. Your upward gain is probably about 120, 125, maybe 150. I think oil will break itself around 150, maybe 180. You know, we'll see what happens. But my point is, it could go up like a darn hockey stick here in a little bit in this year. So that's great news for us that are investing in oil. It's sad news, harsh news for those who are not having to pay at the pump. Okay, so this is huge. So Qatar and the U.S. are tied for the world's top LNG exporters. So LNG is liquefied natural gas. This is great for us. Look at the chart. So Qatar was pretty high since 2012, give or take, and they just kind of maintained right. We in the U.S. have been flying up. So we have been exporting natural gas by liquefying it, okay, and compressing it so much that it turns into a liquid. We put it on a ship and we send it somewhere else, right? This is good for us that are investing in like the shale and other oil and gas investments in the U.S. because we're the ones reaping that, right? If they drill for our minerals or the rig is ours, when we pull that and we ship it and we sell it overseas, we get the benefit from that. All right, so peak COVID has hit China in popular cities, Beijing, Tianjin, Guangzhou, Chengdu. This means getting back out and about as traffic levels bounce. So what kept oil low, or quote unquote low, last year was that China had a zero COVID policy. They just shut everybody in. They said, hey, if one person's got COVID, shut down the whole factory, everything. So nobody's really going anywhere. Nobody's moving. And China is like a third of the world's population. Well, not a third, sorry. It's about, 1/8 of the world's 1/4 of the world's population, right? About 20%, give or take, 20-30%, depending how you count it and who's on the mainland. So this is going to affect oil prices, but really what it really affected is a perception of traders, and we'll get into that. Years of underperformance has left energy as bottom quintile of observations heading into this new year, despite gaining 48% in 2021 and 59% in 2022. This sector still has room to run, and run it will, right? Now, don't get me wrong. I am happy if oil just hovers around 90 to 105 a barrel, right? I am happy as a clam because I'm making a ton of money on my investments and not doing a thing, right? And oil will not eat itself, right? As they say, the cure for high prices are high prices, right? And I know some people that's like, why they don't invest in anything. It's like, well, you're just going to be sitting there and missing out. But the oil it gets to the danger zone about 125, definitely at 150. Okay, so it's got more room to go up, and we're investing in something that is basically, it's kind of like a rental home, but for the oil and gas industry. You just put your money in, you sit there, and you get your monthly paycheck, right? And so you can continue to hold it even though the value goes up and down and still make a good paycheck. So CapEx still remains low, meaning supply is going to be a problem while demand outstripping supply. This is what a lot of us have talked about in the industry, that demand is going up and it's stabilizing, right? But the issue is supply. We don't have enough, and it's getting slower and slower to pull it out too, as we'll get into a little bit. So what's leading oil and gas volatility? This is what we've already talked about, but let's go over it again. It's not the fundamentals. It's portfolio managers being forced into selling oil and gas investments as they meet unprecedented net mutual fund redemption. So there's that. It's also kind of hearsay, right? Political jockeying and other things that make traders do this. Another item, and this kind of goes with traders, right, is that again, there was an oil bust not too long ago when President Trump came in and said, "Hey, drill, baby, drill," and they put so many drills in the ground that it just dropped the price. And then Saudi and Russia have some oil wars sometimes, mostly with the U.S. because they both hate us. But the biggest thing is this: is that just like in the housing market, the people that were here during that time survived it. And so a lot of the banks, a lot of the fund managers, they're like, hey, if you're betting this much on oil, that's fine, but you have to hedge it, right, with a certain amount. And that hedging, you push oil back down. So in other words, if you buy oil at like say $1 billion at $50 a barrel, that's going to push it up to whatever. Like we'll just pretend 70. I'm just throwing numbers out there. And if they the bank and the hedge funds vendors say that's fine, you can have that, but we want our investment protected, so you're going to have to short it with $500 billion, right? So that pushes it back down from 70 to like the 60s or such. So that's another reason why it's not fundamentals that's leading it down. It's just a bunch of paper talk, kind of like paper suppression, right? And what happens when this paper suppression, in other words, when people buying and trading and using not just dividends, but what do you call it, where you rehypothecate the stock? I forget. Basically, the fugazi that they talk about in trading, to where you say, hey, I'm going to borrow from Fred. Fred's going to borrow from him, and everybody thinks they're borrowing the same thing, but in reality, there's only one unit of it. So if it's an apple, you've got 9 IOUs for an apple and one apple. Let me say that again. So hypothecation is if you have a candy bar, right, and I give it to one guy, and he has an IOU from me for a candy bar, and that guy does it again to someone else, and it happens again 9 times, right? So there's 8 IOUs in one candy bar. But in the system, it shows that there's 9 candy bars, but in reality, there's only one. What happens if someone eats that candy bar and there's no more left, and they default, right? Well, it's not just one candy bar that disappears from the system, it's 9. Okay, that's kind of what our financial system is based on. Scary, I know, but this is what's pushing down oil and gas, or keeping it volatile, right? Eventually what's going to happen is we're going to eat that candy bar, we're going to eat up all the oil and gas that we can, and all of a sudden those IOUs are going to come due, and when it busts, what's going to happen is the price is going to fly through the roof. It's going to be like a giant hockey stick. All right. And there's, again, crude markets are peaking again, or starting to see interest. Hopefully that made sense. If it didn't make sense, post in the comments, let me know, and I will do a better job of explaining this, because it's quite elaborate and extensive and confusing. But once you know it, you kind of get it. So, all right, other notable thing, China raises fuel export quotas to spur refinery outputs. This is good. So this is good news for oil demand out of China. Raising quotas plus China emerging from zero COVID policy should be very positive for demand. That said, likely we will not start seeing real demand pickup in China until after Chinese New Year. Oh, especially during Chinese New Year. My gosh. Basically, Chinese New Year is like 2 weeks of a holiday and everybody's traveling. Like you get like 2 billion people traveling all at once. End of Q and end of Q2. This leaves January and February very prone to volatility. Hey, that's going to happen type thing. Plus, we're coming out of the winter months, which is slow for oil anyway, decent for gas. But a lot of the gas demand was front-loaded last year, so we might see gas dip. This is a great buying opportunity. This is a great time to buy, to set yourself up for oil and gas later this year. Shale oil wraps up an underwhelming year. Grids for lower growth. All right, I'm going to let you guys read this, but I'll give you I'll give you her commentary. It's going to be more and more difficult to get growth out of shale. Likely we have already seen the peak back in 2019. Moving forward, this means higher for longer oil prices, right? This is really important. Less quality production is coming out of the Permian, out of the Bakken, he said, referring to the top 2 shale basins from Reuters. So here's the big issue. Here's what this means. Easy oil is gone, and medium oil is getting harder to find. what this means is it's going to come into getting harder oil, right? And what does that mean? Oil gets more expensive. That's just how supply and demand works. So oil prices, the value of oil will go up in the future, right? Companies, they will probably do okay. I think the oil product is going to be worth more because companies with oil going up, all of their expenses go up too, right? So we've actually seen a few rigs being laid down in the U.S. What does that mean? That means those drilling rigs that they have up there, and the more that they have, the more they're pulling out of mine minerals and others, but the more they can put on the market, right? But if they have to put some down, so the smaller oil and gas companies that are using older rigs have to put some down, what happens is that's less oil in the market, right? You know that, but the older rigs, the ones that break, the ones that need repair, it's kind of like driving a car, right? You can use it for so long, and you make some repairs, and then it just becomes to a part where it's like, hey, it's not even worth repairing anymore. You know what I'm saying? So you just put it into the scrapyard and you start over again. Well, same thing, but instead of like, a $20,000 car, you have a $10 million rig, right? And so you need another 10 million to put that rig back up, or maybe a little bit more, depending. That doesn't come by very easily, and so what'll happen is we'll probably just see a condensing of drilling rigs and units, to where only the strongest will not just survive, but only the strongest will thrive, right? And that's why we choose minerals with some top companies on them. So anyhow, my name is James. I'm gonna let you guys look at the rest of it type thing. It talks a little about Brazil and such. Again, if you're on my email list, you'll get this. But my name is James. If you have any questions or comments about this, contact me. The information is below. But I want to know what your thoughts on oil are. What's your thoughts on 2023 in general? Like as a place to park some money. What do you guys think is a good spot, right? What are you doing for your research? What are you looking at? What are you thinking is going to happen in general? So with that, I will let you go, and I hope you have a great start to your first week of the new year.